Hi, I'm David Schenck. I'm an attorney and enrolled agent, enrolled to practice before the IRS, and I talk about tax issues, estate planning, and asset protection. Today, we're going to talk about IRS liens and how to remove them. So what is a lien? A lien is a legal notice that the IRS has claimed a security interest in your property. The IRS is not the only creditor who can issue a lien on your property, but they're the one we're going to talk about today. Generally, once the IRS has filed a lien on your property, you can't sell it, refinance it, or engage in other financial transactions relating to the property. Liens are usually filed at the county level, although there are some states where they're filed at the state level. And they affect all the property that you own in that county. And this includes property that you acquire after the lien is filed. And while an IRS lien is going to apply to all property within the county, your clothes, your car, for most people, the property that counts is real estate. So if you get an IRS lien, the first thing to do is not to panic. A lien is not a seizure. If you intend to keep living in your house, you have no current plans to sell it, and you don't plan to refinance it, generally speaking, you can. The IRS is going to remove the lien under certain circumstances. If the lien was filed in error, this happens occasionally, obviously they will remove the lien. When the outstanding balance of your tax debt is paid in full, they will also remove the lien. And if the tax debt is settled through an offer in compromise, the lien will be removed as well. They will not remove the lien if you're paying on an installment agreement, or if the lien becomes unenforceable, for example, by the expiration of the statute of limitations for collecting that tax. The IRS may also release the lien to allow a sale. Obviously, they will only release the lien to allow a sale if they expect to get something from that sale. So if the proceeds of the sale, up to the limit of your outstanding tax debt, are going to be paid to the IRS, they may agree to allow that sale. For example, I had a client who sold an office building to a relative. The IRS had a lien on the property, and of course, no bank would finance the purchase with the IRS lien outstanding. But with a little negotiation with the IRS, the lien was released and the sale was completed. Of course, the proceeds were paid to the IRS as agreed. Disclaimer: this video and any accompanying text is for informational purposes only. The information provided does not and is not intended to constitute legal advice. No attorney-client or similar relationship is formed. If you require legal advice, please contact an attorney or other legal professional. This video covers a complex legal area in just a few minutes, and of necessity leaves out much of the detail. Don't make decisions based only on this video.